Many people, including myself, experience FOMO from time to time, fear of missing out. It's an emotional response to observing others succeeding from some kind of efforts, investing, business building, dating, etc. While on the surface, FOMO may seem like a powerful drive to get active, to put yourself out there, to make certain efforts, to strive. It's none of this. Because when you come from a place of fear, you are destined to react, to chase, and to doubt yourself instead of responding, attracting, and being certain about your decisions and choices. Hello, 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 and welcome to the More Money with Millen Show on the topic of FOMO and strategic investing. I'm Millen Livis, the host of the show and holistic financial independence mentor. I work with people who make good money, but are not good with money and are not financially free. They come to me because they want to be financially savvy so that they become financially free faster and easier. Today, I'm excited to guide you through this insightful journey from FOMO, fear of missing out, to the world of strategic investing. We'll dig into the pitfall of FOMO, the fear of missing out, and how strategic investing can help you navigate the ever-changing investing landscape. But before we start, a couple of announcements. First, on Thursday, August 24th at 1 p.m. Eastern Time, I'm going to lead an exclusive interactive 1-hour pop-up training, Think and Live Wealthy. The registration for this free 1-hour training will open next week, so stay tuned. 2, if your financial well-being matters to you the most right now, and you're ready to act on this knowing, go ahead and schedule your Never Worry About Money Again strategy session with me as soon as possible. The link is on the screen. Let's look together at your financial objectives, at where you are right now financially, and how to close this gap as fast as possible. Act on your knowing instead of worrying and procrastinating. You don't have to do it alone. Let's start with understanding FOMO. FOMO is a powerful emotion that affects many people, like I said, including myself from time to time. When you see others profiting from a booming financial markets, you can't help but feel like you're missing out on the opportunity of a lifetime, on some action. For example, the Nasdaq's impressive performance and tech giants like Apple, for example, reaching new highs this year can trigger this fear, because many investors right now are in a most protective state and they don't want to be heavily invested in the stock market. But it's essential to remember that investing based on emotions can lead to impulsive decisions and potential devastating financial pitfalls. So let's talk about the dangers of chasing highs on the markets. Chasing after high-flying stocks and trendy investments that you may receive promotions in your email or see on social media can be tempting, especially when you see others reaping huge gains, right? However, this FOMO-driven approach can be a double-edged sword. Investing in assets without thorough research and understanding of their fundamentals can lead to significant losses when the tides turn. So let's talk about the role of strategic investing. Let's explore a more prudent approach. Strategic investing. Strategic investing involves thoughtful planning, diversification, and a focus on long-term goals. Rather than getting swept up in short-term market movements, strategic investors aim to build a well-balanced portfolio that can weather market fluctuations. Personally, I consider myself a strategic investor because I like to sleep well at night. So next, let's talk about building a strategic investment plan. Now that we understand the dangers of FOMO, fear of missing out, and the allure of chasing high-flying stocks, let's explore into building a robust strategic investment plan that can help safeguard your financial future. In the context of the current economic landscape and the recent markets surges, strategic investing becomes even more relevant and crucial. As we witnessed during the first half of 2023, tech giants like Apple and some AI, artificial intelligence-driven companies, achieved astonishing milestones. However, strategic investors understand that a single sector's performance doesn't define the entire market. Instead of being swept up by short-term enthusiasm, they stay true to their long-term objectives. Okay, you've got to know your long-term financial objectives. Building a strategic investment plan requires a comprehensive understanding of your financial goals, your risk tolerance, and your investing time horizon. So let's break down the 6 key components of a well-crafted investment strategy. So you've got to first, you've got to have clear financial goals, as I mentioned earlier. The foundation of any strategic investment plan is setting clear financial goals. Are you saving for retirement, funding your children's education, or planning a major purchase? Get clarity about your top financial goals, maybe 3 to 5 top financial goals. Each goal will have a different time frame and risk profile, which should inform your investment decisions. For example, my goal when I started my journey to financial independence was to be financially free before my retirement age. So I had a clear time horizon. I calculated my financial freedom number. So my objective was very clear, and then I followed this objective with the strategies and tactics. Okay. So number two is you've got to assess your risk tolerance. Risk tolerance plays a crucial role in shaping your investment choices. It's essential to honestly assess how comfortable you are with market volatility. Many people are not comfortable. Understanding how much volatility you can stomach will help you determine the right asset allocation for your portfolio. There are no cookie cutters when it comes to strategic investing. So everybody has different risk tolerance, and you've got to create a portfolio that incorporates this factor. A high-risk portfolio might deliver substantial returns during bullish times, but it could also lead to significant losses during downturns. And with age, your risk tolerance factor is especially an important one to be mindful of. I am a risk taker by nature, but I took a lot of risk in my life, and not all of this risk was substantiated with good results, right? So even though I am a risk taker by nature, right now I am much more conservative with my investment strategies because I'm not 20 or 30 years old anymore, right? Next, you've got to incorporate strategic asset allocation and diversification. So asset allocation is the art of spreading your investments across different asset classes such as stocks, bonds, real estate, precious metals, and cash. Diversification further minimizes risk by diversifying your investments within each asset class, right? So you never invest all your money in one egg, right? You have different eggs, and then you put these eggs you diversify these golden eggs along different baskets, metaphorically speaking. By diversifying, you avoid putting all your eggs in one basket. This way, the performance of any single investment will not have a disproportional impact on your overall portfolio. So strategic investors carefully weigh their asset allocation to align with their goals and their risk tolerance. Next aspect of strategic investing is to do your own research and your own due diligence. Okay, so strategic investing involves thorough research and due diligence. It means going beyond flashy headlines and digging into companies' fundamentals, performance charts, right? You've got to really learn how to read companies' charts, which is not that difficult. That's what I teach my clients. You also have to look at, incorporate in your research, incorporate the aspect of current economic environment and current market trends. And, follow the trend, right? Don't go against the trend on the markets. Also, be cautious of financial media hype of market movements. Media tends to hype market movements. Relying on knee-jerk reactions without your own proper due diligence can be a recipe for disaster. Very often, they predict that we're going to have a major crash and people sell with a lot of losses, and then nothing happens, and vice versa. So strategic investors are well informed and make decisions based on data and research. And I would add on intuition as well. Okay, next would be embracing patience and discipline. You've got to embrace patience and discipline. Patience and discipline are virtues that can set strategic investors apart from the crowd. And that's why when people come to me to become financially savvy, I recommend that they don't jump into investment right away, that they work on their mindset, that they become savvy money managers so that they don't have inadequate reaction to market fluctuation. Markets will inevitably have ups and downs. That's the nature of markets. But staying the course and not giving in to emotional impulses are keys to long-term successful investing. The market might test your nerves at times. It definitely tested my nerves quite a few times. However, reacting impulsively can lead to very costly mistakes. Strategic investors understand that time is on their side, and they let their investments grow and compound over the long haul. I can personally attest to this important aspect of strategic investing. At first, I felt scared and overwhelmed seeing the fluctuations in my investment portfolio. Now, I am much more grounded and calm because I practice disciplined results. And finally, the last aspect is you've got to seek guidance and professional advice. While strategic investing empowers individuals to stay informed and to take control of their financial future, seeking advice from the qualified financial professionals, financial coaches, advisors, planners can be invaluable. Financial professionals can help you tailor investment strategies to your unique needs, provide expert insights, and act as a source of support and guidance during uncertain economic times like we experience right now. So it's not building wealth it's a team sport. It's not a lone wolf kind of experience. Now let's talk about what I call the big loss. Embracing strategic investing also aligns perfectly with protecting yourselves from the dreaded big loss, as I mentioned earlier. By avoiding impulsive decisions driven by FOMO, fear of missing out, you can significantly reduce the risk of suffering devastating financial setbacks that could derail your retirement plans or other life goals. A well-diversified strategically managed portfolio is like a robust shield against market downturns. It allows you to make profits while minimizing the chances of experiencing crippling losses that could negatively impact your financial future. I met many people who in the past lost money through investing, and they afraid to touch any kind of any form of investing. So there are ways. Strategic investing is the way to avoid these devastating experiences of losing all your money. So as you navigate the exciting yet unpredictable world of investing in financial markets, let's take the lessons of strategic investing to heart. Be patient, be disciplined, and be well informed. Remember, you are investing for the long haul, and your financial journey is a marathon, not a sprint. By adopting the strategic investing principles that I shared with you, you can confidently pursue your financial dreams while guarding yourself against the potential pitfalls of the market. So stay curious, stay informed, and stay strategic. Work with financial coach or advisor to help you navigate the markets with confidence, resilience, and determination to achieve your financial goals. In summary, I want to remind you to reflect on the importance of strategic investing and the dangers of yielding to the FOMO, fear of missing out. Instead of chasing quick gains, let's focus on building a robust financial foundation with a well thought out investment plan. By embracing strategic investing principles, you can navigate the markets with confidence and resilience. That would do it for this episode of the show. Hope you got some valuable practical insights today. Would love to see your feedback in the comments. Again, two important announcements today. Number one, on Thursday, August 24th at 1 p.m. Eastern Time, I'm going to lead an exclusive interactive pop-up training, Think and Live Wealthy. Brand new. The registration for this free 1-hour training will be open next week. And number two, if your financial well-being matters to you the most right now, and you're ready to act on this knowing, go ahead and schedule your Never Worry About Money Again strategy session. Here's the link. Never Worry About Money Again strategy session with me as soon as possible. Let's look together at your financial objective, at where you are now financially, and how to close this gap between your objective and your current financial situation as fast as possible. I invite you, as always, act on your knowing instead of worrying and procrastinating. You don't have to do it alone. Wealth building is a team sport. Thank you very much for watching the show. I'm honored to be in this space with you and deeply appreciate your time and attention. Have a fabulous week. I'll be back with a new episode of the show next week. In the meantime, let go of FOMO and stay in your power to your health, wealth, and freedom.